What's up guys, Raymond here with episode 7 of our financial statement analysis videos in our financial statement analysis series for the German industrial stocks. And in our financial statement analysis videos, what we do is we analyze the top 3 financial statements relevant to a company, those being the income statement, the balance sheet, and the cash flow statement. We also look at the key factors of each statement, for example, total equity, dividend yields, PE ratios, earnings per share, that type of thing. And we attempt to come up with an overall picture of the financial strength of a company, as well as how viable its future is. So without further ado, we're going to get into the key ratios, and then we're going to start off with the income statement and then follow up through the balance sheet, then end the video off with the cash flow statement. So the key ratios show that the market cap, which is the overall value, market value slash market price of the company, comprised of its individual shares multiplied by the value of each share, which is 485.62 million euros. The PE ratio is the price to earnings ratio. That's a ratio which is divided up into the price of each stock, which in this case is 4.007 euros, and that is divided by the earnings per share. As you can see below, the earnings per share is 0.34 euros, so 34 cents, and then we get a P ratio of 11.88, which is really good. I always say that a P ratio of at least 10 is a really good figure. The revenue figure, which is the overall sales in the last financial period, was 1.62 billion euros. The dividend yield was 3.73, which is just below our minimum requirement, or what we would consider a good dividend stock of 5%. 3.73% is not bad, it's still good. It depends on what the company does with the rest of its cash and the rest of its operating income and the rest of its net profit. That determines how well a company is going to do in the future, as well as other factors. The beta level, which is the overall risk level of the company, or of the stock rather, was 1.46, and the average is 1.0, so it's 46% above the market average, which is not too bad, considering that in our most recent videos we've seen beta levels that are around that figure or more. So we're gonna get into the income statement, which is the first of the financial statements, which depicts the overall income and the net profit of the company, and it also balances the net income to the revenue. So the revenue figure, as you can see in the past 3 financial years, is quite high. The 2020 financial year was the lowest in terms of revenue as well as in terms of net income. It's the only year of the 3 that had in which the company made a negative net income. So we're going to get into the balance sheet. The balance sheet shows the overall liabilities compared to the overall assets of the company, and it kind of shows of the financial position. And ironically, it's also considered, or it's also called the statement of financial position. So the light pink figure on the graph is the represents the total assets of the company, which is around 1.3 billion consistently over the past 3 financial years, and the dark purple figure represents the liabilities. So the company's maintained around 50% or lower debt to asset ratio over the past 3 financial years, which is really good. I would say a debt to asset ratio of 0.5 or 50% debt to assets is a good level to have. Anything higher starts to negatively affect the company with regards to attractiveness to potential shareholders. Let's get into the cash flow statement, which depicts how the company manages its net income as well as how it manages its debt. So the starting line is the net income, which in 2021 was 34.10 million euros. In 2020 it was negative 106 million euros, and in 2019 it was 88 million euros. So it kind of has a regressive it's had a regressive growth, net income growth, which is of course not good for the company, because it kind of deters the current shareholders, and it also deters potential shareholders, because potential shareholders ideally want to see an earnings growth, steady and healthy earnings growth. But without further ado, let's get into the cash flow from operating activities, which was 93 million euros in 2021. The cash flow from investing activities was negative 67 million euros, and that was divided up the majority of which went to capital expenditures, so expanding the property, plant and equipment so the company can be more productive in the future. And the cash flow from financing activities was 56 million euros negative, which the bulk majority of which went to retiring debt, so eliminating debt. And that's probably why you saw the liabilities figure in the 2021 financial year lower than the 2020 financial year, because it had been reduced by the managers who had used the cash flow from the net income as well as cash flow from operating activities to reduce the total liabilities. The cash flow from foreign exchange effects was 1.4 million euros, which is quite trivial. The net change in cash was negative 28.6 million euros, and in 2020 the net change in cash was 9.4 million euros, and in 2019 the net change in cash was negative 77.5 million euros. So there's quite a large disparity between the net change in cash of 2019, 2020 and 2021, but overall I believe the company done quite well with regards to cash flow in the 2020 financial year. It also performed certain functions really well in 2021 financial year. For example, reducing its debt by quite a large amount. So we can kind of accept the negative net change in cash due mainly to the fact that it used a lot of its cash flow to retire debt. So without further ado, I'm going to close this video. I hope you guys enjoyed the video. Thank you for watching, and I hope to see you in episode 8.